All right, welcome, Eduardo. How are you today?
Good, Sebastian. How you doing?
Good. Excited to be starting this course, this series for aspiring property managers and current property managers that are looking to scale. So if you're listening to this, yeah, you're either getting started in this vacation rental world or looking to press the pedal on the accelerator and start growing faster and faster. So I'm here with Eduardo, who's the founder and CEO of Angel Host, a serial entrepreneur. And we're going to be going through a series of modules that are going to teach you anything from the basics of starting a property management company all the way to the more advanced techniques that have to do with revenue management, that have to do with listing optimization, and strategy as a whole, from the experience that Eduardo has had starting multiple businesses and also taking Angel Host from zero to more than 1,000 properties under management. So before we start, Eduardo, would you mind just telling us a little bit about yourself and Angel Host?
Absolutely. Thank you, Sebastian. So, like you said, I've been involved in the world of entrepreneurship for many years. I think it's about 25 years now. I've started 7 companies in total. Some of them were very successful. I was very lucky. And some of them were very unsuccessful, and I actually had to close them. So I've seen the good, the bad, and the ugly. And I think I've learned my lessons over time, on what works and what doesn't, and I'm still learning. And very excited today about being able to share, some of those lessons and that could help other aspiring entrepreneurs, especially those in the world of vacation rentals and short-term rentals on how to scale their business. It's a very exciting industry, interesting one, with tons of potential. I always say, if you're going to start a business in an area that is growing, in something that is growing, because when you ride the wave, it's much easier than when you swim against the current, right? So I think the short-term rental world presents tons of opportunity for growth, tons of opportunity for so many entrepreneurs, and I would say is the right market to be in at this time. So yes, like you said, we'll go through some interesting points that hopefully will be helpful for those listening. Even if you just catch one thing that helps you, we'll be very happy, right? And yeah, so why don't we get started
Yeah,
and get
absolutely.
going?
Absolutely. And I'll just add, because it's growing so much, there's more and more competition. It's very important to stay educated. It's very important to fine tune your skills. So yeah, I think this is gonna be hopefully very insightful. And even if, as Eduardo said, you take just one thing out of this, hopefully it's gonna make all the difference. So we're gonna start today with the first module, which is laying the foundation, right? So everything you need to do when you're thinking of starting your property management company, you want to have the solid, foundation that's going to allow you to scale later on. So first of all, Eduardo, what should people think about when they're trying to determine their ideal customer profile? Who should they go out and start offering their property management services to?
Yeah, absolutely. I think I would suggest a very important rule for people to follow, either, and not only in the vacation rental world, but any type of business. You have to go into a business that you enjoy, that you understand, and of which you can want to be part of. So if you're going to be launching a property management business, you have to think to yourself, what type of property am I comfortable managing, right? Am I comfortable managing small budget properties with 1 bedroom, in a certain area? Or am I comfortable managing ultra luxury properties, right? That are going to rent for $2,000, $3,000 a night, that have a completely different set of requirements. So whatever you're comfortable with, it's obviously part of your decision. And the other one is, of course, going to be geography, right? You cannot just start a business and say, well, I'm going to move to Hawaii. I've never been to Hawaii in my life, and I'm just going to move there and start a property management business. It was probably going to be a little bit difficult. You should choose a place where you live, or maybe a place where you go often on vacation, a place that you're familiar with. And that will, of course, greatly improve your chances of success, in part because those trusting the property to you will have more confidence in your abilities of understanding how the local market works versus if you're a newcomer and you say, well, I've actually never lived in Hawaii, but I'm going to be able to do an incredible job for you, right? So I think
Mm-hmm.
geography and type of property are two key decisions that you need to make, that you need to take into consideration, sorry, in order to start your business.
Yeah, and I would say also, beware of luxury, right? Because it might sound very fancy, and to your point, got to make sure you're comfortable with what that is going to lead to, and the type of expectations that the luxury type of both owner and guest is going to have.
Yes. Yes. And I would say that generally speaking, of course, the higher the revenue per year of a property, the better the business model can be. Because when you're playing with very small properties or very budget properties, you need volume to compensate for that low rental revenue. So
Mhm.
beware of that, right? Beware of markets where the average daily rental is very low because the amount of work that you're going to put into every rental and to every check-in is very similar, whether you're renting for $300 per stay or $2,000 per stay or $20,000 per stay.
Mhm.
Once you get into the ultra luxury world, it's a little bit different. You need way more preparation, and it's another story. But for the most part, as a rule of thumb, try to go with markets where you can actually have higher average daily rates and higher occupancy rates. It will simplify your life. It will make your running of the business much easier than if you try to make it in a market that has very low rates and very low volumes.
And going a bit off script here, but at Angel Host, you have properties in more than 50. We have properties in more than 50 cities. What are you looking for when you're trying to determine if a city has enough potential? Are there any rules of thumb in terms of number of listings that
Right.
you want to see available in a certain market, or certain trends when it comes to growth of demand or inventory?
It's a very good question because one of the I would say one of the errors that we made early on was we were just happy to add a client no matter where in the world they were, and irrespective of how much revenue the property produced. And we quickly started realizing that our margins, given all the cost involved, all the licenses that we had to buy, all the people we had to hire, it was very difficult to make a profit when, let's say, a property was producing less than $15,000 in revenue per year. So over the course of time, we have decided to focus more and more on markets where we know that the properties can produce at a minimum of 25 or $30,000, right? That's what our model requires for it to work. I'm not saying that this has to be the case for everyone. Maybe if your structure is lower because you are in a different country. But for a company operating in North America the way we are, we have properties in the Caribbean, in Mexico, in the States, in Canada. I would say that as a rule of thumb for us, $25,000, $30,000 per year is kind of like the minimum that we can entertain for this to make sense and for us to be able to deliver the results that we want to deliver.
And you want to see a certain critical mass in terms of number of listings. I believe we aim for 1,000 plus. I mean, not that there's not
Exactly. We don't want
exceptions.
to. It's sometimes if you go to a market that only has like 50 properties, well, I mean, to make this work, you would need to basically capture the entire market, right? Which would be unrealistic. So, whereas if you go into a market that has 14,000 vacation rental properties, then all of a sudden, if you want to aim for 100, well, you're talking about less than 1% of the market, right? So it becomes much more reasonable. So yeah, it's a good point. So it's a mix between the size of the market and the average revenue per property that should dictate, what markets you decide to go into. But again, don't go into a market that you've never been in, like that you don't know anything about, because then your chances of success will be greatly diminished.
Yeah, makes sense. Now you're at this stage as a property manager where you're wanting to get started, or you're wanting to structure your business a little bit better. You might be thinking, okay, do I need a business plan, or how much planning or strategic thinking should I do before just jumping into the water and just getting started. What are your thoughts there on the need of for a structured plan versus just, you know, trial and error?
Of course. I'll never forget when I graduated from business school, I had to write a business plan for my thesis and in order to graduate. And I remember that I put a lot of effort. And I remember one of my professors telling me, you know what, for every hour that you put building your business plan, you're going to save yourself, countless hours of potential issues down the road, because it forces you to think, it forces you to reflect on every aspect of the business. How am I going to do marketing? What are going to be my costs involved? Who do I need to hire? How much is that going to cost? Now, the only thing I would say is, as much as that's very true, at the same time, there's also the concept of analysis paralysis, right? And you could end up spending hundreds of hours building the perfect business plan. And sometimes it's better to have the fundamentals, but then just get it started, right? You do want to have some solid financial projections. You do want to have some solid idea of what your marketing and sales plan will be, but also don't spend 2 years writing that business plan or having a 200-page document, right? For me, a business plan is a document that allows me to reflect, to see where I want to go, allows me to set myself clear objectives, and it serves a little bit as a guideline as to where I want to go. Now, reality of business is that whatever you write on that business plan, once you get into doing things, a lot of things will be different than the way you plan them. But that's okay. You'll be like, oh, I thought that this was this way. It's a different way. I'm going to readjust my analysis, and I'm going to see where I can, make adjustments to my business. But it's still an exercise that I would recommend without going too much in depth into it, But it's certainly something that I would recommend people to do and take the time to reflect.
And it's a good point, like not thinking that because you wrote it in your original business plan that that's how you need to do things necessarily. As soon as you start getting some feedback from the market, pivoting or adjusting, I think becomes important. Very good, very good. So moving on to the next topic here, looks like my computer just froze. We have how to build a solid financial plan. What are some of the basics of financial planning, financial modeling? You have a background amongst many other things, right? Revenue management. You also have a background in investment banking. You have an MBA. So like you're very numbers oriented. But when you're first starting, you don't want to like necessarily do a very complex model either. What would you say are some of the important things for people to take into consideration as far as
yes, and we're all a bit scared of math, right? And if most people around the world, we're a little bit scared about numbers, but it's really important to take the time to build a very basic financial model. It doesn't have to be something very sophisticated, but every aspiring property manager, every existing property manager should have a budget, should have some sort of financial visibility into their company, right? Into what lies ahead. Again, it doesn't have to be extremely complicated. It can be as simple as saying, what is going to be my average daily rate? What is going to be my occupancy rate? And therefore, what is, at the end of the day, the amount of revenue that I'm going to be producing every month? And it's important to break it down by months, because in the world of vacation rentals and short-term rentals, there's going to be great variability, right? There's going to be some good months and bad months. So it's very important to do it that way. So yes.
And the expenses, do you find that it makes sense to consider, and I guess this is more of an advanced question, but I'm still curious, like seasonal costs, right? Like perhaps there's certain costs that or certain people that you cannot afford to have
throughout the year. Yes.
Full time throughout the year. Is that something you would?
No, absolutely. You definitely have to plan your costs and understand them. I always advise people not to go into an extreme level of detail, how many liters of gas will I be using on average per day? I mean, you can make some high level assumptions, but it's important to understand, what are the main cost drivers of your business? What type of
Mm-hmm.
employees do you need to have? How much you're going to pay them? Are you going to need to have a physical space, a
Mm-hmm.
warehouse, to store materials? How much is it going to cost? Do you need transportation? What is going to be the leasing cost of that vehicle? So some high level costs are very important to understand.
Mm-hmm.
Because the last thing is that you don't want to be in a situation where, 3, 4, you start hitting the low season and you realize that you simply don't have enough cash, right? You have to monitor cash extremely well in this business. You don't ever want to be taking money from reservations that don't belong to you, right? Because in this business, sometimes you receive money for future reservations, and it's important that we all understand that that money doesn't belong to us. That money still belongs to the guest until the
Mm-hmm.
check-in happens, right? So one of the, I would say, one of the big sins that some property managers commit is taking part of that money or financing themselves with that money. I think that, and that's why some states in the US and in other parts of the world are now trying to enforce having something called trust accounting, so that you literally separate what's your money from the money belonging to your clients. But I'm deviating a little bit, but it's
No, no,
just
no, but it's
to
a great
understand
point.
that it's very easy for property managers to say, oh well, I'm having a difficult month, I'm just going to take some of that revenue. But hey, what if that is canceled? And not only that, out of that revenue, only a small percentage of that booking belongs to you. The other part belongs to the owner. So it's important to be very careful with your financial planning. And that's why I think it's important to have those financial projections, to have those budgets, to understand what is your cash position every single month. And we'll talk maybe a little bit about this later, but also to price your services the right way. Because I've seen
Mm-hmm.
many times with different property managers around the world how they end up struggling because they price their services too low.
So how should property managers be thinking about that precisely? Like what should be the thinking process to say, hey, this is I should
Mhm.
be charging 20%. Is it just like looking at what everyone else is doing and trying to be like more competitive, or what would you
I
recommend?
think that's precisely the error that most people make, right? They get into this market thinking, those guys are charging 35%. I can do it for 20, right? And in fact, I don't like the fact that the guy charging 35% is nickel and diming the owners with all of these little expenses. I'm going to include everything in my 35%. And I don't like the fact that someone else charges a monthly fee. I'm going to include everything in my 20%, right? So that's the wrong approach, because you're going to find yourself very quickly realizing that once you factor in the cost of your licenses and your people and your supplies and your insurance and your accounting and your legal fees, it starts adding up. So you're going to quickly realize that that 20% commission that you were very excited and signing clients left and right, you're going to quickly find yourself saying, oh, this is actually not enough. And good luck now trying to tell an owner that you're going to start charging them more. Before you can count to 3, they'll be just jumping ship and going with another property manager. So it's very, very important that you price your services the right way. I always say it's better to make the effort in taking more time in signing a client and explaining why your fees are probably within the highest within the industry because of the results you're going to produce or the service that you're going to give, and maybe sign less clients than signing more clients at a much lower percentage and having absolutely no profit margin or negative profit margins by signing clients at such a low rate. Not to mention that if ever you want to sell your business, you have a much better chance of selling your business at a good valuation if you have a contract signed at a decent rate than if you're trying to sell your business saying, I have 150 properties, but I charge on average an 18% commission and my margins are minuscule, right? You might
Mm,
think you have a very valuable business. In reality, once you face the markets, you're going to realize there's just not that many buyers, right? And I
mm,
speak from the perspective of a buyers ourselves. We have actually gone out and help and facilitate buying some property management companies. And we have quickly realized that there's some that are extremely valuable and others that seem valuable. They're actually not valuable at all because of the low margins that they operate with, right? So as a rule of thumb, I have seen that in markets in North America, property managers need to end up collecting one way or another anywhere from 35 to 45% of the booking revenue. In other words, it doesn't mean that they have to charge a commission to the owners of 45%. It means that they might charge a commission of 25%, but then they have a fixed monthly fee to pay for the expenses. Or maybe they have some extra insurance fees where they make a small profit. Or maybe they make a small profit on the cleaning fees as well. At the end of the day, if they're not keeping around 40 cents for every dollar of booking revenue, it's going to be very hard to turn a profit. Again, it depends, of course, if the property produces over $75,000, $100,000 a year, of course, you can afford to have much smaller margins, much smaller commissions. But again, that's why it's important. I'm just giving you these numbers. I'm throwing these numbers out there, but they will vary depending on the market, depending on the cost of labor in the market where you operate, in many other factors. So don't take this number to the bank. In some markets, it might not be 40%, it might be 50%. In others, it might be 20% because you're dealing with ultra luxury properties. But whatever the number is, it's very important that you look at it carefully, you analyze your numbers, and you make sure that you price your services the right way. My
And I want to,
company
yeah,
ever
sorry, go ahead.
actually had to close because of that, because I hadn't calculated the prices properly, and I ended up going out of business because I was pricing too low.
So let's dive a little bit deeper here, because to your point, the total fees you should be collecting from the booking value is going to change based on the market and the revenues per property, but the margins, right, that you should be aiming for are going to perhaps be more consistent, right? You should have certain margins and certain, gross margins and net margins too, right? So tell us about those concepts. What is a gross profit margin, and what are some rule of thumbs or of where that should be, and how does that influence how much bottom line or profits you're gonna get at the end of the day?
And let's make it very simple to not get into too much math and too much complicated concepts.
Yeah, because it's module 1, right? We're gonna get into
module
the
1.
advanced
So let's just
things.
have it at a very high level. You have your revenue, right? Which is going to be basically the commission that you charge to owners, as well as the cleaning fees that you charge, as well as any other ancillary services that you might provide. That defines your revenue. The next important line is your gross margin. What is the gross margin? Is taking your revenue and subtracting whatever is required to deliver the service that you delivered, right? Whether it was the person you had to send to do the cleaning, or maybe the cleaning products that you had to use to clean the property, or the fixed maintenance cost that you have, like whatever it is that it's attributed to the rental cost, that the more you rent, the more you pay. So not included in your in the cost that lead you to the gross margin would be things like your rent, or your own salaries, or your insurance, or your accounting. Those are fixed costs. But I'm talking about all the costs required to deliver the service. So once you subtract those costs, you get to the gross margin. As a rule of thumb, your gross margins have to be at least 50%, not only in this, but in many other industries, right? 50% or higher. In fact, the ideal is probably around 60, 65%. And then you subtract your costs, right? Your additional costs, and that gives you the net profit margin. So I guess if we can leave the audience with a number to take home when they're building their financial projections, they should aim to see that gross margin at around 50%. So that once they discount the other fixed costs, they can still aim to have a 10, 15% net profit margin at the end of the year.
So what about, like, you're a property manager, you're going out there, you're looking at all this technology that's available. We're going to have a module specifically on how to find the best tech, but what about those costs? Like, are they part of delivering the service? Are they fixed
Absolutely.
because they're charging
Absolutely.
you a fixed fee?
Very good question. So let's say you are managing a property and you're probably paying a license for a property management system, whatever you're paying, 10, 20, 30, 40, $50 per month. You have to take those costs into consideration, right? Maybe you're paying a monthly license for the electronic logs. Maybe you are paying a monthly fee for someone to do your revenue management so that you can maximize your income. All of those things have to be taken into account when calculating your gross margins. Exactly.
Yeah, and I think that could be a mistake, right? Some people make when determining how much to charge owners is
Mhm.
they might underestimate how much all of this technology can end
Oh,
up costing.
absolutely. 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 They put a number in mind and only to realize, like, wait a second, I have to produce account statements. Oh, wait a second, I need an accounting module. Oh, I need my calendar synchronization. Oh, I need to have someone responding the phones all day. Oh, I need this, I need that. So that's the importance of the business plan and those initial financial projections to really truly understand your costs and to be able to price your services accordingly and not find yourself in a position where after investing so much time and effort, signing your first clients, serving all of those guests, find yourself at the end of the month saying, I did all of this work for what? I
Hmm.
didn't make a profit. I need to go back
Hmm.
now to my owners and increase the prices. And like I said, that's one of the hardest things to do.
Hmm. Yeah. And to wrap this first module up, people listening to this might be thinking of scaling. What are your thoughts on getting investors? What are your thoughts on bringing in, outside capital versus
Mhm.
just bootstrapping? Until when should you bootstrap? And and
Mhm.
and what are your thoughts on just,
Yeah, it's a good
capital raising?
question. I've been lucky to go through different companies and to create different companies, and some of them I raised significant amounts of financing. What I can tell you based on my experience is that if you're trying to launch for the first time a property management company, there will be no financing available. I mean, it's going to be through what's called love money, right? Friends and family, or your own savings, trying to get things off the ground. Let's be real. That's what's going to need to happen, at least at first, right? You're going to put your own money to get this started, or you can ask a friend or someone that trusts you, someone from your family. So that's how it starts. Once you get to a certain volume, where you can turn around and prove to an investor, look, what I'm doing makes sense. Here I have 15, 20 properties and look at how they're working. This is the revenue I'm getting. These are my gross margins. This is my profitability. Now I need your funds in order to go out and get the next 15, the next 20, the next 25. That's a good moment to get outside investment, right? Because you have
Mhm.
something, you have a proof of concept. You have proven that you can do it and that you can deliver a profit. If you only have one or two properties, I mean, maybe you can get an investor to trust you. I wouldn't. I would just probably think, well, if you're doing well with one or two properties, maybe it's because it was your own property and maybe it was your uncle's property. You haven't really faced the reality of managing properties for third parties that are unrelated to you. You haven't faced the issues of different geographies within your own territory. You haven't faced, a lot of the potential issues that you can face once you have a larger portfolio. So I would like to see a minimal critical mass of properties to demonstrate to me as an investor that it's a solid business, that it can be scaled, right? That the right
Mhm.
technology has been put in place, that the right team has been put in place. And now with my money, what's going to happen is that scale will happen. It's not using the money from investors to experiment. The money from the investors should be used to grow, to scale, not so much to experiment. So yeah, that would be my advice. Try to build a solid base, a solid operation, which you can then showcase to potential investors, and your chances of raising money at that point are quite high. But in the early days, definitely self-funding, in my opinion, and based on my experience, it's the only way to go.
Mhm. And should you even consider, once you've gathered that early, critical
Mhm.
mass, should you even consider at that point bringing in some, outside capital versus just continuing to grow organically? Like, what, as an entrepreneur, how should you be thinking about that? Like, does it
Right.
make sense in my business model to
It's a
bring
very
some
personal
outside capital?
decision, it's a decision that everybody has to make. Once you involve outside capital, you have to realize that you're no longer the king of your domain, right? You're no longer just operating in isolation and making all decisions by yourself. You're going to have now investors to report to. So on the one hand, you're going to be able to scale faster, but on the other hand, you're going to have the pressure and the oversight from those investors. So you have to make sure that you're comfortable with that. If the reason why you went into the business of property management in the first place was because you were working at a multinational company and you didn't like the idea of having a boss, and all of a sudden you move into property management and you start getting investors, believe me, those investors will act like your boss, right? They will want reports, they will want explanations on why things are going a certain way or another way. And more often than not, they will want to have a certain influence in the decisions on what markets you go into or how you run your business. So it's a personal decision that you have to consider. Do you prefer slow and steady growth where you keep full control, or do you want to go for a more aggressive play where, the stakes are higher? Of course, the payout could be much higher, but then again, because you're involving third-party resources, you have to understand that there's a price to pay for that in terms of how freely you can run your company.
Amazing. Well, listen, Eduardo, this has been very, very fun, very insightful. This is the end of module 1 out of many more to come. There's about 10 of this. So yeah, we looked into a lot, and yeah, thank you for the time, and stay tuned for the next episode where we're going to talk about talent acquisition and team building for scale in property management.
Fantastic. Thank you for your time. Thank you, everyone.
Thank you.